Welcome, ladies and gentlemen. Today is September 3rd. Let's go through our 5-minute market snapshot. Today we're going to start with the ES, the S&P 500 E-mini futures. And even though there's a risk of a potential for a downward swing in the markets from current levels, potentially trying to reach these lower levels that I've been predicting for many, many weeks, the real reality here is we're setting up a broader price flag, as you can see with these orange lines. Very strong potential. We're going to find support here off of this Fibonacci level, 39.35 roughly. Potentially move back higher to around the 42.12 to 42.15 level. Bounce back down here off of this 4,000 level, and then attempt to rally back out of this. Very strong potential here. We could have a breakdown out here near the end of this pennant formation here, but time will tell. I think the Fed is going to move into a softer stance. I think the U.S. markets are going to likely find some strength going into the end of the year, possibly into early 2023, as we potentially, hopefully, maybe set up a wave 5 formation here to the upside. So this is what I'm kind of looking at right now. Unless we get a big breakdown taking place, this could be the end of the correction with a very solid A, B, C, D, E phase. This could be the end of a wave 4 correction, beginning of a wave 5 move to the upside. I think this pennant formation, if my analysis is correct, somewhere near October, November, possibly early November, will apex and begin to move to the upside. Okay, let's take a look at gold. Gold will likely start to move quite a bit higher over the next couple of weeks because of this. Now, these are weekly charts. Because of this massive apexing here. We had a breakdown back into the 1700 level or close to it. This puts us at another major triple bottoming formation. Actually, a quintuple bottoming. 1, 2, 3, 4, 5, 6 potential bottoms at this point. I believe gold's going to start to move considerably higher as the Fed weakens, potentially weakens into the end of the year. I think the Fed is going to be stalling and watching to see what happens and maybe not raise rates as aggressively. And I think that's going to push gold and silver quite a bit higher. Crude oil is moving downward, struggling to try to find some support right now. And as you can see, I've drawn this pennant formation across these highs here. And of course across these lows, which give us our flagging formation. And I believe the next move for crude oil is going to be down here to 62 to 64. I think the energy crisis, consumers pulling away, moving into the winter time, potential resurgence of COVID in some cases. I know quite a few people that have had it recently. Thank God I haven't. Long and short of it, I think crude oil is kind of washed out. The excesses of the 2020, 2021 rally peaked out in early 2022, and I think we're now washing ourselves back down into this area here, and I think this is where oil's going to try to find some support. So somewhere down here in this 64 to call it 52 level to try to find some support. Let's take a look at Bitcoin. Bitcoin, my prediction with Bitcoin is that it will move lower. It will try to break downward, not necessarily like this. Let me redraw this. Ultimately, we have these downward cycles. But in reality, ladies and gentlemen, this 18,000 level, roughly right across these lows, gives us a very solid base. And what I think is going to happen is Bitcoin's going to move down, stall, and then begin to move back up to around the $20,000 to $30,000 mark. I think this is going to be a shift of the global markets, capital rushing into safe haven assets. Potentially, this might be a move where global currencies weaken and or the U.S. dollar begins to weaken. This move will probably stall out around 28 to 30,000. So be aware that Bitcoin right now likely to set up a good solid double bottom before, say, September 10th or 11th. And then start to move considerably higher. And it might be fairly quick as it tries to get there. Let's take a look at the financial sector, XLF. Financial sector, real quickly, is moving into a very solid formation, very similar to what we see in the S&P. I'm going to draw some quick lines here. We've got kind of a basing formation across here, and we have some potential for an upside trend taking place here. Good solid support here at this area. This is pre-COVID. You can see way back over here. If I were to try to draw this efficiently, about like this, you can see that's pre-COVID support area. We're back into this pre-COVID support area. We've washed out all of the excess of this time frame. And now, ladies and gentlemen, we are moving towards a pennant formation, something that's going to be more along the lines of an up phase, a down phase, an up phase, a down phase, and then some sort of a breakout. All right, well, that's it for the 5 minutes. Tried to cover as much as I could. Follow me on Twitter. Follow me on YouTube. Remember, the markets give what they can to us, and we need to stay cautious while the markets are in this weakening phase. There's going to be a lot of volatility over the next 20 or 30 days, and very likely we move into a Christmas rally phase into October and November. All right, that's it for now.